Welcome to the Daily Stock Review. Today we're going over ASML. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor, 2,500 hours into the journey over the last 7 years. So I'm sharing the lessons along the way. So we're going to go over, get stuck in to the stock analysis straight up. This is my investing process. Today we'll cover where to look and this 5-minute check that will give us an initial pass. Learn off these guys. They've got a pretty good track record for decades, and I'll be emulating their success. Let's get stuck in. So first up in my process is go and find the annual report, literally just typing in ASML annual report. Jump into that, we'll go to their investors page and see what information they've got in terms of previous reports. And the reason why I do this is, actually it looks like 2025 is their latest one. Let's crack that open. The reason why I do that is that's the information that is publicly available to everyone. It doesn't rely on media as much. Some of them do have some media guff in them, but it's a standardized way to have a look at a potential investment. So where did I come across this one? Well, I've seen it around and talked about for a little while. I have a reasonable understanding about what they do as a company, as in they build the machines that make silicon chips and other hardware that's pretty much required for everything that we utilize today in terms of technology. So they have a pretty good stack and a lot of intellectual property in terms of it's very difficult to make these machines. So what I'm looking for is we're going to go straight for the throat and go financials and financial performance. For this 5-minute check, that's what we want to kind of do straight up. Is this business worth looking at? And if it is, then we can dive deeper a little bit later, as opposed to finding an investment, spending an hour reading an annual report only to realize that it's a terrible investment and it's not worth our time. So we've got a bit of a disclosure from their accountants, and what I've got here is consolidated statement of operations. So looking at what's also called our income statement. Now over here it's got a pretty ordinary layout, especially for trying to display it to you guys, especially if you're on phones, etc. So net system sales, let's just look at total net sales. So this company in previous years made millions of euro. Yep. So 27.5 million euro, or 27.5 billion euro, 28 billion, and then in the previous year, or 2025, most recent, they made $32.5 billion. So steadily increasing in terms of net sales, in terms of net system sales, as well as, I guess, servicing their units in the field has been increasing as well. Now, what about the actual cost? So we want to see what our gross profit is, and thankfully they've got that breakdown there as well. And so we can see that that's been growing, that base as well. So from 14 to 14.5 billion to 17 billion. So research and development, R&D costs, even with those costs coming out, the business is still making an income from operations of 9 billion and 11 billion euro. Then got interest, etc., taxes that come out, and the net income at the end of the day is a little bit lumpy, but there's a few, I guess, we're only talking about chips between these two, 2023 and 2024. So net income has increased in the last year from around that 7.5 to 7.8 up to 9.6 billion. And so what is that compared to their system sales. So, around 10 billion to 32 or 30 billion, just round it off. So it's got about 30% net margin at the end of the day, which is pretty crazy. So this is just in terms of that, we'll go back through the cash flow statement and see if there's anything weird and wacky going on to drive up these gap accounting figures in terms of net income. But if that's the case, that's got a very healthy net margin at the end of the day. And so that would signify a very strong moat around its product. Speaking of, that's the first 3 steps in the process. So has this company mastered its customer? Does it have a moat around its business? And does management, are they rational? Do they know what they're doing? Are they able to allocate the funds of the business adequately? So just by looking at that income statement, the margins are really healthy. That shows that they've mastered their customer, and it also shows that there could be a pretty good moat around the business, just looking at the finances. They've got pricing power. So from the research that I've done previously to this, I do know that it is a lot of intellectual property, and it's very difficult for other competitors to build the extensive knowledge and know-how to be able to build these machines. Is it impossible for others? No, definitely not. But it does make it a little bit more difficult. And with technology always on the move and increasing with innovation, I want to see that these guys are investing their research and development to maintain that moat. All right, balance sheet. Let's have a look. So assets, total current assets. And let's just look total assets of 50 billion compared to total liabilities of 30. Looks pretty reasonable there. Is cash on hand or cash equivalents is pretty significant. Total current, so long-term debt and things like these, I just want to check, make sure there's nothing too crazy going on. Long-term debt is very low. Contract liabilities and things like that is fairly low as well. All right. Retained earnings, treasury shares cost, total shares equity. All right, cool. So now I'm going to go and have a look at the cash flow statement, because this gives us a breakdown of where the management team are allocating their money. So is it rational? And it also includes where the money comes in, where it goes out, and then also where they're actually, trying to divvy it off to. So net income, that's from our income statement, straight from those figures there. And then it washes back through here. So we take away all these non-cash charges, a couple other cash adjustments, and then our net cash provided by operating activities. You can actually see it's increased quite a lot. There's accounts receivable net, which bounces around a bit between years, which makes it a bit lumpier. So we got nearly 1 billion, back down to near 0, and then back up to 1.4 this year. A couple other ones like that just jump around in terms of what they've got on hand at the time, like inventories, other assets, and things like that. Accrued and other liabilities. So with these guys don't do like huge volume, say for instance like iPhones. They're not selling hundreds of thousands and millions of these things. There's only we can go back through the numbers and have a look in a more of a deeper dive later. But they're not selling that kind of volume, so it can be a little bit lumpier when we're looking at these. Depends on, has the contract been delivered, etc. So cash flows in investing opportunities. So what I'm looking for is purchase of equipment and plant. So fairly steady over the last 2 years. And then there is almost $500 million less spent on property, plant, and equipment, which is not too crazy in terms of the difference, but something to keep an eye on over the years. If they're increasing throughput, do they have that capacity, and are they maintaining the equipment to be able to do that in the future? So investing activities is pretty small. They're not putting too much into that. Financing activities, proceeds from borrowings, yeah, it's negligible compared to the original figures that are coming in. So purchase of treasury shares, so we can have a look at that at 22. In this last year, so 2025, they've actually purchased a lot of their own stock. So what that does is, for long-term shareholders, it's just making your piece of a share a little bit bigger. And what that means is you own a little bit more of the company as they take other shares off the market. So on a deep dive, I'd want to be having a look at see what their long-term strategy is for it. And are they buying these shares at or below the value that they think the business is, long-term, that is. So if they're buying it when it's way, way overpriced, it's actually destroying shareholder value. But that's pretty good. So net cash used, that's actually, that spending of money is actually helping us at the end of the day. Net cash flows, we could see there. So that's a pretty rational team. If they don't have anything else to invest in to make the business any more money, allocating the money there to repurchase shares is a great option. So free cash flow is just net cash provided here from operating activities minus this capital expenditure figure. And so we come up with that, and we can see that that has increased significantly over the last 3 years. And so we want to, in a deep dive, have a closer look at some of these numbers and go back through a bit more historically. So we might have a look at if we've got 2023's figures here, we might go through the 2022 report. So we've got, about 6 years worth of info. So we can see where this trend kind of develops, and is it, just been working its magic like that. So that's pretty good. So this business, straight up, it ticks the boxes for mastery, ticks the boxes financially, that is, for the moat, and it ticks the boxes for the first 5-minute check for management team as well. I'll be coming back to this business after finishing this off and doing a deep dive on it, so doing the homework portion on this process. So we want to look for where we're actually going to find these businesses. So I've seen it with a few other great investors that have jumped on and purchased this stock. And then I've also seen it in a couple other circles where people have been writing about it as well, in the value investing space. We want to separate it from the herd, which is what we've just done. Me explaining it to you guys takes a little bit longer than 5 minutes. But if you're doing this yourself or for myself, it literally takes 5 minutes to check, and it saves so much time. Next step in the process will be for me to go and do my homework on it, and I want to read up on some other key areas of it. We're just really going deeper on that mastery, moat, and the management. And then I also want to get to the stage where I'm doing a valuation of the business if I like what I see that far. So at that stage, I'll then value the business. That could be, I'll be doing another video on this business, and putting that up. Then at the end of the day, if do your homework and valuation and it still looks good, then strike or track. So am I going to make a decision on that business? So how's it fit with the rest of my portfolio? Where does this business sit? I don't want to have entirely weighted just in these kind of technology companies, because that puts me at risk unless I'm looking at that basket very specifically and on the horizon for other competitors. So knowing how they all kind of fit together is important, and then also making that decision, is now the best time, or are we waiting for some form of catalyst to come along? So is that a competitor in the marketplace or is it an AI kind of interruption? People are thinking that we won't need this company because of AI and things like that. You can get ripples in the market. So that's pretty much it. If you like this and you want to see me do the deep dive on this company, so ASML, I will do the valuation and do a mock review of is this business, where does it fit in terms of a portfolio and things like that. Click subscribe so you don't miss it. If you like this or you have any other questions, if there's any other companies that you guys are interested in and you'd like me to go and do a review, put them down in the comments below. I'll go through and I'll be reviewing those in the coming videos. If there's anything else, otherwise, have a good one and check out this next video. YouTube reckons you'll like it. Cheers.